The Nasdaq's going up, the S&P's going up, the Nikkei's going down, the DAX is collapsing. What's going on in the markets? Hey, fellow traders, ladies and gentlemen, how are you guys doing? It's Live with Rob again. Here we are. We're back on the show. How's it, Shane? Hope you got your ads already. Yes. Good to see you got your ads already. That's good. Well, you'll still get some more. I'm pretty sure of that. That's without a doubt. Don't forget, trading's risky. Most traders do lose money. And if you don't like losing money and risk, then obviously you should be doing something else. Let's go and have a wee look at what we've got here. Let's go and see what's going on. This is the DAX. Look at that. Bit of a collapse down there. That seems to be falling down. But then you get the Nasdaq, which is over there. And that's just going to the moon. But there is a bit of a red candle on the end here. And you'll find the same with the S&P 500. It's also starting to show signs of weakness. There's a bit of an undecided candle at the end there. So it looks like it's going to come back and retest. Is it going to break to the upside or not? I would draw that in a block formation, so it's still in the resistance effectively, even though it's broken through that green line. It is still in the resistance. I wouldn't call it just yet. Give it a chance, see how it goes. How's it, Sir Lunchalot? Good to see you on board again. Absolutely lovely. The Nikkei, I said this morning, is short, but I was waiting for it to break through this level just to give us confirmation. So let's see if it breaks through that and gives us a closed candle below that, giving us the short trade. Brent crude oil has done nothing for me as usual, still sitting here. And of course, my favorite trade, the United States dollar, South African rand, very much based on what's happening with the US dollar. How's it, Carl? Good to see you. Usual crowd are coming back, which is what we always like to see. United States dollar, Japanese yen, United States dollar, Japanese yen looking a little bit weak. Looks like it wants to drop down. This midterm support here is holding it up, and then it does break further down off to the main support. Gosh, it's been an interesting couple of days. I've been fighting with the Discovery Medical Aid who don't want to pay anything. In fact, they want to cancel my medical aid because I've had so many fights with them. Guys, if you ever want to take a medical aid or an insurance, steer clear of Discovery. They're absolutely worthless. They're just going to give you a headache. They advertise themselves as this big, massive, fancy company, and all they are is a load of rubbish, let me tell you. All they've done is giving me a headache, nothing else. And I'm going to actually make a video on it sometime. Maybe not on this channel, but I'm definitely going to put something together with all the paperwork and whatnot. These guys are terrible. It's the worst medical aid ever on earth, let me tell you right now. In fact, if you're invested in their shares, get out now, because they're a bunch of scam artists. I can tell you that right now. I've never come across such a bunch of scammers in all my life. And they promote themselves as something special. So particularly if you live in South Africa, phew, get the hell away from those guys. I don't know who I'm going to go to next at my age, but anyway, we shall see. They basically call you a liar and tell you didn't tell them something, or it's such rubbish. It's unbelievable. I'm waiting for euro, US dollar crossing down. Euro, US dollar. Euro, US dollar. I had it here somewhere. That's Euro, Great British Pound. Oh, let me just put the Euro, US dollar on here, just out of Euro, US dollar. And let's just see what the Euro, US dollar is doing. You say you're waiting for it. The Euro US dollar grossing down. Well, you could wait for a while. You need a bit of a movement to the downside. I would say, just glancing at this, let it break past these lows over here, which will probably give you that trend as well. Let it break past these lows over here. If it breaks past these lows over here, then you've got a downward move. So those lows would be around about there, and that would give you your movement, let's say, on the Euro US dollar. You could take that move there if you wanted to, if it does go down towards that. But what you're looking at is the obvious situation of, it kind of needs to break through this level for it to be short. So I would say it needs to break through there and carry on to the downside before getting the Euro US dollar short. It's still very long as we stand at the moment. It's even above what was prior resistance over here. So it's above that. So it's coming back to retest that. So there's a good chance that it's going to come back and retest this level. So maybe you could actually get in below that level. That's actually maybe better. Now that I relook the situation slightly, there's nothing wrong with having a relook at the situation. If I look at this, it broke through that resistance to the upside, and it's coming back to retest it. If the retest fails and it breaks to the downside, it's going to go through this level, go down. If it doesn't fail, you get a green candle going up, then it's clearly going to stay long. So Euro-US dollar is kind of in that iffy scenario at the moment, in that iffy situation. Great British Pound US dollar will be the same as the Euro US dollar, so don't trade both together, because you just might as well trade everything on one of them. It's probably going to go the same way. The Great British Pound Canadian dollar, you might as well go Euro, United States dollar, Canadian dollar, which is over here. Same thing. And you're going to get a similar move at the end of the day. But this is in the middle, Cyril. You don't want to be playing in the middle. It's a little bit tricky, but it is short. It's already short, but short down to this the sort of support level here. I would wait for it to get down to the support, maybe take a long to the upside, or get up to the resistance and take a short to the downside. But if I look at this, it has already broken that structure, that short-term structure, but you've got a new structure building in there. Maybe just see what happens. It's in the middle. It's not a very good trade to take. United States dollar, Canadian dollar. I'm pretty sure that the Great British Pound, United States dollar is not going to be much different. Dum 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 dum. David, good morning. Good morning, David. Good to see you as well. So I was looking at, obviously looking at some of the news as well, and I'm just going to take us there quickly. Hopefully it picks it up. There's the news. I was looking at some of the news as well and keeping an eye on it and seeing what's happening, because there's a lot going on. They're talking about interest rates and interest rates dropping and US job growth and all these different kinds of things. But the one thing, as I showed you guys on last Thursday, is this Dixie is really, really low. It's gone down an insane amount. And my concern was that it's going to break further down, because if it does that, we're talking about a whole new project. But I'm looking at this 50-day moving average turning around, sort of swinging back, swinging along and swinging back. Now, if this doesn't fall down, if it swings back and goes back through the 200-day moving average, giving us a bit of a golden cross, then it's going to go back to the upside. So keep your eyes on that. Don't take your eyes off that. That could do anything at any moment. I did have a look at this VIX spike here, which would have spiked everyone out of their stop losses had that been the case. But the VIX on, I looked at the VIX on IG, and that one is fine. I didn't get into it there yet because that one is still on 18 or 17 or something like that. So it's a bit high. I prefer to get in on the 15s, but this one is pretty much ready to get into if anyone owns this. This is the CBOE Volatility Index. So if you can trade it, then you can trade it, but very, very few brokers offer that. But yeah, on the other side, there's Apple in the news. There's a lot of things going on, and there's a lot of talk about the Fed and all the rest of it. So yeah, it's going to move markets around a little bit. But as I've said before, do not hang your hat on news articles that happen on a regular basis, because they're just going to move you up and down and swing you back and forward. And I just actually do need to keep an eye on this Nikkei. This JAP 225 is starting to look like a reasonably good short trade. That's what I was calling this morning, and I do think that it's about to give us a possibility. So keep an eye on that. Don't let that one fall behind. And you know, the title of this video today was, you do need a business plan, you know, to trade in the market. And I keep on harping on it, and I still see there's still quite a few people that don't get the difference between strategy and system, the difference between a business plan and an actual system. Your system is what you trade with. Maybe you trade with price action. Maybe you trade with the open range breakout. Maybe you trade with Ichimoku. I don't know. You know, everybody trades with something, and that's your system. And the system is 50-50, and charts can't predict the future, as I always tell you. Neither can you. But interestingly enough, the strategy will always, always, always remain the same. The strategy won't change, no matter what system you use, because the strategy or your business plan is the way that you make money in the market. So try and remember that. Try and remember that the charts are great. They're there for you to trade with, but your business plan must always remain the same, even if you're trading on lower time frames or different time frames or whatever the situation might be. Now, what I've done for you guys, what I'm busy with for you guys, I haven't done it yet. I'm still busy with it. Still in a work in progress, let's say. I'm doing a video on the relative strength index for you guys, the RSI and that sort of stuff, and how to trade it. For those of you who missed the information that I gave you in the other live shows and what have you, just to give you more detail on that. But that doesn't mean that I trade with indicators. I most certainly don't. But in the past, I have. And in the past, I've traded with all of them. I've tried every different indicator known to mankind, even the ones that they're offering out on the moon and stuff like that. I've tried them all. But some work, some don't, in my opinion. But every single trading system actually works. There is no trading system that doesn't work, because some genius has backtested it somewhere down the line, and somewhere down the line it's going to work. So we've got Shane, we've got David, we've got Blue Mango, we've got Sir Lunchalot, and we've got, who else is here? Where's Elaine today? We've got Coral. I'm glad to see you guys are all here. It's fantastic. I'm sure there's more people here, but you are the guys that I can see on the list at the moment. If anybody is here that I haven't named, give yourself a good morning on the chat. Say how's it. I don't mind. Don't be embarrassed to say hello. It's all good. We love seeing your name on the chat, and then we know we're all here and we're all cool. It's absolutely brilliant. Now look at Bitcoin as well, by the way, guys. The crypto trade. I love the crypto trade. The crypto trade. Now the other day I was looking at this and thinking, gosh, which way is this going to go? And the difficulty was that it had broken through and it had broken structure, but it hit this, what was a support, and has now become a sort of resistance for it to retest. And then it breaks through and it comes back, breaks through, goes back, breaks through, comes back, breaks through, goes back. I mean, it just keeps on doing this, and it's sitting in this very tight little range here. So this has widened quite a lot. So what I would do now, before I even consider a long on Bitcoin, is I would wait for it just to break, and I'm just going to show you that. I'm just going to wait for it to break that prior high. Just break that prior high, and I'm going to make this green because it's to the upside, okay? I just want it to break that prior high to give me confirmation that it's going to the upside, because this is now becoming, look, there's a resistance, there's a resistance. Every time it hits that level, it bounces back, which means this level is a bit higher. So I would like to see it break through that level before taking any long trades on that, which would be interesting. FX Trader, how's it, man? Good to see you. Funny thing happened today. All my trades against the Japanese yen got wiped out by the news. Just demo trade. Okay, luckily for you, just demo trades. Yeah, actually, I still said to you, Shane, that we're going to have a show where, once again, I'll do the 5-minute thing, but I'll have to use, I think I'll use a demo account for that, because I don't want to destroy any of the accounts or anything like that. So I'll sort something out for that, and then we'll have a fun 2 hours or something. Trade on the 1 second charts. How's it, Elaine? Good to have you again. Good to see you there. Absolutely brilliant. I love seeing all you guys' names, and I love seeing all you guys back. It's like having a nice little team and a group of friends. It's brilliant. Gold is going to see if it can find the moon up there somewhere. It just keeps on going up. And as I said to you guys, my main thought on commodities at the moment is if the Dixie, which is the US dollar, by the way, keeps on going down, then there is a good chance we're hitting a commodity super cycle. And I think that's what's in the thoughts of the institutional money. They're probably thinking we're going towards that. So they're loading up on gold, probably copper, and a number of other things as well. Surprisingly enough, not oil, because they believe that Donald's somehow going to talk oil down. But I'm pretty sure that somewhere down the line it'll get talked back up again. They're just waiting for you all to get sucked into the not being in it, and then it'll fly again. It always does. Let's just keep an eye on that, see if it goes down. The 5-minute challenge, yeah, sounds like a fair idea. The DAX was going down when we looked at it just now. There's the DAX. Germany 40 in this case, but same thing. Now, my opinion on the DAX, actually gave it yesterday, was that it might go back up and grab some of this supply of money at the top here. But it didn't, because there is a trend resistance running down here, which it bumped into and came down. Look at the big big undecided candle over there. That's an indecision candle. Why is it an indecision candle? You've got all these buyers at the bottom, all these sellers at the top, and a tiny little body in the middle. That's normally an undecided candle when it looks like that. It's not a spinning top or anything like that. It's an undecided move. Doesn't know which way it wants to go. Could sometimes predict, like the smaller spinning top predicts a change in direction, but the undecided candle is just, it doesn't know. Now, I could understand why it didn't know, because, it was looking for that money, or is it coming down again? And look what it's done. So it's hit that trend resistance, gone short. So it is quite strange, because the markets were very bullish, but obviously there's news in the markets that are affecting it. And it's got a big red candle going to the downside, which means nobody trusts it. And it's obviously coming down. But the worst case scenario for the downside for me at the moment is down here at the 235, this bottom level here, the support, 234.490, or 234.88. Yeah, 234.88 is the main support. It's a direct line support, but it'll go a bit deeper than that. There'll be a blocky here. So that's your support. So there's a good chance that it'll get down to that support and then go back up again. So the DAX is not very positive at the moment, but then neither is the Nikkei if you look at it. If you look at the Nikkei, also showing signs of weakness, showing signs of coming down. That's what I'm looking for on that. And if you look at the US 500, which has broken through, also with a undecided candle, but to the red side, bit of a retest. So now it's questionable, because if you draw this properly, you're going to see there's a rectangle there. So let's do that. Let's see if we can draw that in at all, if it's going to be possible, because there's not much information there as we stand at the moment. So I don't think it's going to be much of a drawing. No, there isn't much. But if you were to draw anything in here, that would be one of these blockies at the top here, covering this whole area. So I don't want to do that, because it just messes things up a little bit. But it does look a little bit ominous over here. So I wouldn't get too excited about it just yet. I'm looking at it and thinking, yeah, it's in an area of interest, and I want to see it break past this prior high up here. So while I've got this resistance in here, we could actually draw just a quick, I don't want to draw a blocky in here because it's just a bit messy. So I'm just going to draw that in there to say if it breaks past that line, then we can talk about a decent long trade. Got a feeling, because it's above this trend and it's just hanging on here, that there's a good chance that it could break to the downside as well and correct. It's due a correction. We haven't had a correction in a long time. We haven't had a proper correction on the S&P for quite a while. The NASDAQ is also at the top. I mean, if you look at the NASDAQ, where did I put the NASDAQ? Here's the NASDAQ. Look at it. Right on the top here. Heavily on the top. NAS 100. Look where it is. Right at the top. I mean, there's a resistance level here. So that tells me that it's way overbought. There's a good chance that it could relax a little bit and then go up, or it could correct. We're waiting for a correction, in all fairness, and the correction would be down to these levels down here at 23,000, which is nearly 1,000 points away. So I'm just looking at that and thinking, not comfortable taking long trades on that as we stand at the moment. And there you go. There's United States dollar Japanese. Who mentioned now that they got stopped out on the United States dollar Japanese yen on the news? Now, earlier on, I said Yeah, this is going short into the support level, midterm support, but it could break through to the lower support, and here we go. It's breaking through to the lower support, which is great. And then if you get a green candle off of this lower support, we're getting a nice long run to the top. But we have to be careful there as well, because there is another area, a lower area down here, which could have an effect as well. So just before you draw a million lines on, just keep an eye on that. And that, for that, you can see the Nikkei is also in negative territory. Boom, 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 boom. Who mentioned the Japanese yen? Oh well, okay, but yeah, it's been an interesting one. Boom, 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 boom. Shane's becoming our main administrator. Everybody's got Shane's email. Yeah. That's why you get all the ads, Shane, because you're the main admin here. You're the main dude, man. So they give you all the ads. Swallow up all the ads for everyone else. Right. Let's see. That's another thing that I wanted to discuss with you guys. It's quite important, is you don't need to trade every day, by the way. You don't need to trade every day if you're swing trading or position trading. And there's this question between swing trading and position trading. Oh. There's a big question between the terminology of position trading and swing trading. It really doesn't matter as long as you know what you're doing and you're trading and you're positioning yourself in the market. It really doesn't matter what you call it. It's not important. But it is interesting, because I got to say that we used to call swing trading, like I say, is when you took a trade. Let's use this as an example. You took a trade at the bottom here, and then you held the trade to the resistance, and then you would turn it short, and then you would be going down, and then when it hits the bottom, you go long. That's what we used to call swing trading, when you stayed in the trade, and obviously at higher time frames and longer periods. Nowadays, it refers to a trader that trades long and short. That's it. It doesn't really refer to staying in the trade, swinging it back and forward. And a position trader is termed more like an investor or just a position. Now, in my day, a position trader was someone who was taking positions on a day chart or a 4-hour chart, and either way, short or long. And as I say, swing trading was when you were swinging your trades around. In other words, when you felt it was time to sell, then you would sell, but you would also sell into the market and be short. And that was swing trading in the old days. But that seems to have changed now. So everybody calls it swing traders now. I get it. I mean, today, all I hear is swing traders and day traders. I mean, the definition of a day trader, someone who trades during the day. But does it really mean you have to trade on the 5-minute time frame? Not really, because we used to call it day trading when we used to trade on higher time frames, even as long as we were trading in and out of our trades in the same day. So that's what the terminology of day trader is. If you trade in the same day and you trade out on the same day before close of business. So it's terminology is an interesting thing, but what I was getting around to is if you're a swing trader, and that's why I brought the terminology up, because I'm going to call it a swing trader. If you're a swing trader, you really don't need to trade every day. You just need to get a couple of big trades. That's all you want. Whereas if you day trading, that definition, you have to trade a number of times every day because you're probably taking quicker, smaller trades. That said, you can make a lot more money day trading. You can also lose a lot more money day trading because you're trading quicker, you're trading faster, you're trading high stakes, trading riskier amounts, that sort of thing. Whereas on the swing trading, you've got bigger gaps, bigger possibilities to stay in the trade and not get stopped out on a regular basis. So yeah, I do say that, you don't need to actually trade every day. It's not that important to trade every single day, interestingly enough. How do you determine targets on something like gold at the moment, seeing that we don't have levels at all-time highs? I'm going to go into detail on that. Yeah. Okay. So first, before I get to options trading, Blue Mango, determining the target, for example, on gold. And it's actually quite simple, really, because even if you take it to the line chart, you're going to look at it and think, oh my goodness, where's this going to? It's just disappearing into the distance. Of course, you could use Shane's method of Fibonacci. If you trade with Fibonacci, that's fine, but you don't need to. All you need to do is take a trend support and take a trend resistance and draw it in. So where would we put this as a trend? Okay, I'm just going to put that there. Let's see if we get any confluence with that. And there you go. That is actually a trend resistance. And then you can draw your trend support in, which would be in a similar line. Okay. Now you've got a trend level. Now what you're looking for in a trend level is something quite interesting. And that is if you are going up along this chart, right? So now there is a top. So in all likelihood, you can see that it will go up, it'll hit the top, it'll come down a bit, it'll go up, it'll come down. It doesn't go up in a straight line. It's going up at the moment. So your targets are going to be difficult to determine based on the fact that you don't know how high this is going to go. But let's say this comes down and it comes down to a level at the bottom here at 3.5 and you buy it, then your target would be at the upper resistance level at 3.7, somewhere along here. And your buy would be at 3.5. And of course, your stop loss will be below that prior low, around about the 3.450 or the 3.480 level, just to give yourself cover, and also below that support. So that's how you determine your levels on a chart that's going up in a line like this. If you were to buy it here, it becomes more difficult to predict the top because you're buying it at the top, which I wouldn't do. I would always wait for it to relax. You'll probably buy it at this level here at the 3.580 and give yourself a target up here at around 3.7. If you do buy it here, your target's still going to be up here at around 3.7, but it's going to come back a bit and then go up. And it's not going to give you much of a risk to reward ratio. So that's how you determine your profits at the top here. Now, Blue Mango, no. Carl asked, options trading. You see, the trouble with, I used to know a guy who did options trading, and he had a little mathematical equation where you literally couldn't lose the trade. Very, very interesting. You would buy this one and sell that one and put a third one in place, and he'd have this whole trade created, which was far too complicated for my brain. I mean, I was looking at this and thinking, wow, dude, what are you doing? And but it was great. I mean, he actually, with options trading, worked out a mathematical formula where you just couldn't lose. And in some cases you could, but such a little amount, it was quite unreal. But there's not much difference to options trading, to normal trading, to CFD trading, to futures trading. It's all the same. But the difference is that you're locked in. You're locked into your trade. And I think it's something that's come up overseas because of the amount of let's call them sharks that came into the market, brokers that were taking people's money and all the rest of it, markets that are made up and all the rest of it. So they brought in or locked in that you have to do futures or you have to do options, whatever. Now, it works. I mean, but you have to sort of determine for yourself which way it's going to go. And yeah, If it goes the other way, you've got a set loss rather than, you know, a mega loss. You know what your loss is going to be. Yeah. Would I prefer options trading? No, I prefer this. I prefer a contract for difference because I can trade in and out of it really quickly, and I can, you know, cover up my mistakes or whatever if I need to. If I need to get out of a trade, I can. If I want to stay in it, I can. I've got more control over it. So if they gave me the preference, would I choose options over? No, I'd rather choose this. And but if I had no choice, it's not a big deal. You know, I'd do it. But like I say, given the choice, I'd rather work with the ability to get in and out of a trade quickly. I'm lost with fib extension most of the time. I appreciate I use fib levels for pullback, but I'm not going to go into fib right now. It's yeah. Maybe I'll make a video on it for you guys, a proper video with more detail about everything, and then we'll take it from there. Because fib's not just fib. You know, there is more to it than anything else. So yeah, I'll make a video about particularly the extensions and things like that, and we'll go into detail on it. I don't want to make too many videos about indicators and other systems and whatnot, but I'll do it and I'll put it out there and you guys can go through it and peruse it. But don't get too confused with all the different systems. Keep it simple. But the fib extensions might help you in certain cases, but is it necessary? Not 100%. It's not necessary, but it is something you can use. Every tool available in the market is useful, but you must choose which one you're going to trade with. The nice thing about price action is you can add those to it. So, for example, if you're trading with price action, your chart is normally pretty empty like this, and you can add things to it like an RSI or a fib extension or a moving average or whatever if you need to. So that's the nice thing about when you start with price action, you look at something. If you can't clarify your trade with the price action, then you can always throw something else in. But what you're going to find yourself doing, and the danger of this is what you find yourself actually doing is adding in something, and then you keep on adding that in, and then you find yourself adding something else in, and then you find yourself adding something else in, and then before you know it, you're trading with 7 different systems. Do be careful of that. Don't get caught up in that. I've got caught up in that many a time when you just start adding too many things on. And then you see the next time you take a trade, because you used that to confirm your trade, you go back to it again. That's natural human nature. Well, it helped me last time, so I'll go back to that again. And then you put that on and you're still confused, so you add something else. And then it becomes a psychological thing. So yes, use these things to identify. But it's like somebody mentioned on Thursday last week, divergence. And the trouble with divergence is now you start looking for divergence. So to get divergence, now you have to have your RSI on or something. And now you're looking for divergences, but you forget to look for everything else. And divergences come once in the blue moon. So it becomes a bit of a mishmash. And if you have too much on your charts, too much going on your charts, it can become quite complicated. So be aware of that. Keep that in your mind when you are busy. See, there's another one, FX Trader, pivot levels. There's another one, you know. I don't use them at all. Okay, so I don't use them, never use them, never go back to them. You know, it's just another system of looking for pivot levels. And no, I don't use it. Don't bother with it. I don't get involved with it. Have I looked at it? Yes, I've looked at it previously. And is it a system? Every system can work. Every system can work. How good is it? Not everyone's using it, so it's not that great. But yeah, it's usable. Let's say usable. But for confluence in the market, if I'm looking for confluence, if I'm looking for, am I doing the right thing? Is the trade good? Is this a great trade, or whatever the case? There are certain indicators that I will stand by. Okay. And once I've gone through the price action, once I've determined on my my trends, because we trade the three ways, right? We trade with the trend, we trade in the range, we counter trade. Once I've determined that and I've said, well, I'm still a little bit like I need to see something. The only indicator that I will really still stand by in my systems is the RSI. And of course, maybe a fib. A fib is good information. And the other thing I will perhaps look at, particularly in my investing, is the moving average crossover. The moving average crossover is an important factor in your trading. So, for example, I'm just going to go over here. If I can get there and just show you. If you go here to the Dixie, for example, that's a 50-day moving average. That's a 200-day moving average in yellow. And when it crosses up through the 200-day moving average, we call that the golden cross, which means it's positive. And if it crosses back down below that level, it's the death cross, which means it's negative. Great for investments. 200-day, 50-day moving average gives you the long-term feeling on the trade. This is on a daily chart. You can use it on a weekly chart as well. So it's useful for that. In some cases, what I used to do in the old days is I would use a 8-day and a 20-day, or a 9-day and a 20-day, depending on which one was working best at the time. Those are systems that you can fall back on as well. But these are the things that I would fall back on if I really felt the need to. If I felt the need to look for something that's going to give me some proper good information. But the only one that's worth anything at all, the only indicator that's worth any form of salt is the RSI. That's the only one that will give you good information. And of course, for those of you who want to trade volume, how much can volume give you? How much information can volume give you? Not that much. It can really just tell you if it's a good trade or a bad trade. That's all it can do. So, a lot of people will say, no, you can't trade without volume. You can't trade without volume. Well, I trade without volume all the time. Because what I found with volume is, how many times has volume been out of whack when you've taken a trade? And I think back and I think, how many times has volume given me a problem? Probably none. It's like it never happens. It so seldom happens that it's not something I'm going to bother with. Everybody's like looking at volume. Is it a genuine trade? Is the volume moving with the price? And I look at it and think, how many times have I needed to do that? Just about none. So no, I don't bother with volume. Don't bother with it at all. You should, but I don't. I don't need it. It's not important to me. Not important to my system, but it might be important to your system. Let's put it that way. And volume, for example, is completely worthless on Forex. Forex, forget about volume. Don't even look at volume on Forex. You're wasting your time. You want to look at volume, look at shares. Shares are where volume counts, or maybe indexes. But even then, it's not going to really come back to you big time. I'd say if you're investing in shares and there's a big move in one of the shares and you think, ooh, is that realistic or not? Then maybe check a volume pattern on that. But on the general stuff that we trade on a daily basis, indexes, commodities, Forex, crypto, that sort of thing, forget about volume profiles. You're wasting your time. Totally wasting your time. But Shane, that's right. Volume is good for identifying fake outs, but to have volume sitting on your chart, to identify a faker, yeah, that's what it's for, effectively. That's exactly what volume is for, to identify whether the move is good or not. That's effectively it. But on Forex, it doesn't count, oddly enough. It doesn't work so well on Forex. It actually is a big fail on Forex. But like I said, I have put a video together for you guys. Well, I'm putting a video together. It's not finished. Let's be fair. But I'm putting a video together for you guys on RSI, Relative Strength Index. And then I will put another video together for you guys on the Fibonacci extensions, that sort of thing. Because you guys have asked for it. I just like, it's better if I go into more detail and give you a lot more information on it than just quickly like, check this, check that, check this. Boom, 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 boom. Boom, 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 boom. Forex, forget about volume in Forex. Just forget about volume in Forex. Volume doesn't work for Forex. It'll work in the indexes, it'll work in shares and that sort of thing. It just doesn't work in Forex. In Forex, for whatever reason, because of the flows, because of the way it flows, you know, and just remember that the Forex is a very cyclical thing. Like commodities, it goes up, it goes down, it goes up, it goes down. It doesn't have any particular direction. You're trading one currency against another. What volume are you looking at? You know, it's no, you can't use it in Forex. You can use it in the indexes, because the indexes will give you some form of idea, some form of information. But let me just see my Brent crude oil. They'll give you some form of information, but on the Forex, no. And the commodities as well, because commodities, there is volume on commodities. You know, a lot of people will stand by volume, 100%. So many people will stand by volume and say, you got to use volume, you got to use volume. But like I say, I look at things for what they are. And I look at, you know, people tell me to use this, use this, use that, use that. All through my career, people have told me, you got to use this, you just got to use this. And then I go and I put it into my trading and I start using it. And then I find that I've just wasted my time, because how often does it apply? You've got to look at how often things apply. You know, sometimes we attach importance to things, but the importance that we attach to it is too much importance. We don't need it. And it's not going to apply that often in your life. And then you've got all this stuff that you're applying, and it's just too much. So the deeper you get in with all these different little systems and things that you want to apply, and you apply too much information onto it, do yourself a favor and every so often just clean it up. Just clean it out, take it all away and start again and move forward and just see how that works for you. But look, at the end of the day, we're talking about charts now. We're talking about charting, so it doesn't really matter, because we're working with charts and it's just a bunch of squiggly lines going up and down here. I mean, they're going up and down, and it's not predicting the future. It's not predicting anything. All it can tell you is what happened in the past, and you can take a trade from it, and you can manage the trade from it. We all know that you need a strategy to make the money anyway. So it really doesn't matter how you trade it, where you trade it. You're sitting there trading a chart expecting to win every trade. You're sitting there trading a chart expecting to have a higher than 50% win rate. Most people do. Most people expect that. And the only way you get a higher than 50% win rate is by taking quick wins. In other words, scalping or taking small wins all the way through. And then you're facing the danger of the big loss, which is the opposite to your strategy. So win rates, they don't make you money. They just give you a positive feeling, or a feeling that you're doing well, but you're actually not. That's the problem with charting. The problem with charting is we all take on charting thinking that somehow there's a magic system a magic system that's going to make you money. There's a magic system that's going to win every trade. There's a magic system that's going to do better than everybody else's system. Bearing in mind, keeping this one thing in mind, this one very important thing in mind, is that we retail traders make up the tiniest little speck of the market. No matter how many you think we are a speck in the market against institutional money. And the institutional money knows what's happening. They've got all the information and they trade a slightly different way. So what we are supposed to be doing as retail traders is looking for their liquidity and riding on their waves, riding on their backs. And so you sit there looking at a chart thinking that it's going to somehow give you some algorithmic answer to the market. And it's not. It just doesn't. It can't. You can't time the market. You can put time in the market, you can invest and you can have time in the market. But you can't time the market. The market will always lull you into a false sense of security. That false sense of security will take your money. From Nick, how's it, Nick? From my experience, the shorter the time frame I trade, the more rigorous and hands-on my money management has to be profitable. David's looking forward to the 2 videos I'm working on. I'm working on those. So yes, Nick, the shorter the time frame, the more rigorous you've got to be, and the more you've got to sit at your computer, and the more you've got to watch the charts, and the more you've got to control the trade. So swing trading is that much easier. I mean, you can just leave it and go off and do your thing. It's crazy when you think about it. You know, to sit and do yourself in by, you know, if you're bored and you got nothing else to do, or you're just trying to make quick money, then you can drop down to the 5-minute trades. But just remember this one policy that I've always had in my life, and that is, if there's an opportunity to make quick money, and there's like this too good to be true scenario, then it probably is too good to be true. And that scenario is this: you find a gap to make money. Maybe it's in the market. You find this gap. If I go to 5-minute charts, I can make money quickly. I can make money like that in a snap. On the flip side, it's too good to be true, because you can lose money just as quickly. But nobody ever thinks of that. Nobody ever goes, but what about the flip side? What about the other side? If I do it this way, I'm assuming that I'm going to make all this money, but what if it goes the other way? Oh, then I'm going to lose all that money just as quickly. So now that depends on you, and it depends on your confidence and how you think you're going to, how you assume you're going to beat the markets. But that said, we all know that if you trade on 5-minute charts, 99% of traders lose money. So you're assuming that you're going to be part of the 1%. It's going to be successful. And that exercise was done with pro traders, not retail traders. Pro traders. So that's an interesting one to talk about. Good morning from, hey, Rick, how's it going? Good morning from Baltimore City. Good old USA. I had a question for you, Rob. I'm sure you've answered this in the past, but are you more technical or using fundamentals or mix? Love your question, Rick. Love your questions. And yes, millions of people have asked it. Well, when I say millions, I wish it was millions, probably a few thousand. But anyway, if it was millions, I wouldn't need to trade. I'd be just making money off YouTube or something like that. But yeah, anyway, that would be great. But no, on a better note, my trading is definitely weighted towards the technical, and my investing is definitely weighted towards the fundamental. That puts me in 2 lights, because now I sit and I say, well, my trading is more weighted towards this technical aspect, but I have all these fundamentals going on in my mind. Now, there was a time where I would wait for, like I tell you guys quite often, I would wait for the news every week, the jobs figures, the CPI, the economy, the interest rates going up and down, all that sort of stuff. I'd sit and hang my hat on it. Oh, the news is coming out. The Fed's going to talk, whatever. And then I realized that that was just messing me around in my trading, because all it was doing was making the markets go up and down really quickly when that news came out. And then it would settle back to where it needed to be anyway. As far as investing goes, that kind of news was completely worthless, because I'm not looking at today, I'm looking at 30 years' time. So that's like incredibly worthless. So I dumped that kind of fundamental trading completely. I don't do that anymore. I don't even look at all these figures that come out every week. I'm not interested in them anymore. I've got a glance, just a glance, like, oh, that's happening. Oh, the interest rate might drop twice this year. That might be of interest because it's in the background that the interest rate might drop twice. Okay. That'll affect things. How will that affect things? Well, it will affect specifically like investments, indexes, things like that, in the sense that if interest rates drop, there'll be more money for companies to buy things further. So let me put this in perspective. If a company takes a loan of $100 million, okay, at say 5%, and they're making a profit and they're able to pay that profit, and then suddenly they change the interest rate to 7%, how does that affect that company? Can they afford to pay back the loan of $100 million with the extra 2% that they have to now pay back? But if they drop the interest rate by 2%, say 3%, how does that affect the company's profits? Think about it that way. So clearly that company's making huge sums of profit in comparison to if it went the other way. So that should tell you in the back of your mind fundamentally how companies are operating and how things will work if interest rates change. So that's quite a big thing. If interest rates are going to change in a certain way, in a certain light, that may affect markets in a certain positive manner or negative manner. So keep that in mind in general over time. But that said, there are many mitigating circumstances that can affect that as well in the long run. So what I do with fundamentals, rather than looking at the small things, rather than looking what's happening every Wednesday, every Thursday, every Friday, I look at a big picture. I look at what's happening overall. I look at, oh, there may be 2 interest rate cuts this year, or Donald Trump may impose tariffs to the extent that Canada's going to go bankrupt or something. You know, that's stuff that you want to know. Or he's going to lob some bombs at whatever, some country. That could be an issue. That could be a problem. Or there's a bank that's struggling to stay ahead that's going bankrupt. Or someone, let's say someone announces fraud in Goldman Sachs or something ridiculous, and it's gonna fire all the board of directors, and that's going to affect things big time. You know, so something like that is of interest. So what I do is I look at the big fundamentals, the overall fundamentals. The geopolitics are very important and that sort of stuff. Keep your ear to the ground on that. But I used to, in my office, have a TV up there where I could sit and watch Bloomberg all day, CNN. What's the other one with the blue? I used to watch them all. I used to sit watching the news. Like, what's going to happen next? What's going to happen next? I tell you what it does. It propagandas you in a certain direction, and it changes your mindset to a point where you can't trade. You're almost frozen in your trading. So what I did, I stopped that completely. That TV now has my cameras on it for the household. So yeah, that's my explanation of, do I trade technical or fundamental? Trading, more technical; investing, more fundamental. But I do use a small percentage of fundamentals in my trading, but that kind of fundamental is not the kind of fundamental you might be thinking of. It's a much bigger fundamental aspect of the entire market as a whole. The institutional traders care about price levels mostly. Well, yes, they do care about price levels, but you know what they care most about is liquidity. Because you know what an institutional trader needs is liquidity. They need money. If their boss tells them to buy $100 million worth of whatever, okay, they've got to find that $100 million worth of stock from somewhere. They've got to get it. They've got to find it. So they look for that liquidity. Because if you're buying $10 worth of stock, it's like, poof, click, and you got it, and off you go. Because someone would be selling it to you at that price. But if you have to buy 100 millions worth of stock, then you've got to go all the way down that order block, and it's going to go quite far. It's going to go all the way down to a completely different price, or all the way up to a completely different price to what you initially wanted to pay. So they're searching out liquidity. So he's going to have to buy that investment or that trade in blocks. He's going to have to buy that, and then that's it, and then buy that and that. He can't just put an order in for 100 million shares or $100 million or whatever. He's got to put orders in blocks and try and get that liquidity. So the most important thing to those big guys is to find the liquidity, which is why you think they're hunting out your stop loss, when in fact you're not. They're not hunting out your stop loss. What they're doing is you've put a for sale sign out. You put a stop loss in place or a take profit in place. What you've initially done is, if you had a shop, you'd have a sign outside that says sale $6.99. That's what you've done. You've put a sign outside that says, I'm selling this for $6.99. And I come along and say, well, I'd like to buy that. I need that for my trade, my $100 million trade. So I'll buy your shares. And then they buy it because you advertised it. They didn't hunt out your stop loss. You put it out there for them to buy, which is why when you put a stop loss in place, let's say you wanted to sell this now and you wanted to go short, you put your stop loss up there beyond that, because they've probably got their orders. They want to pay that price. They want to pay that price. They don't want to pay that price. That's too high. They want to pay that price. So you just beyond that. But if they decide, well, they really need it, then they'll still swoop up and grab it. That's how it is. They're not looking for your stop loss. They're looking for something to buy, and you've advertised it for sale. And that's how that works. Okay, so yes, they are looking at price levels mostly, but they're looking for that liquidity in those price levels. Fundamentals are more for investing. Yeah, totally, Nick. That's why I said, for me, for my investments, I don't even use charts. I don't even look at the charts for my investments. It's strange, isn't it? My investment account doesn't even offer a charting package, oddly enough. So when I'm buying a share, I'm looking at figures, I'm looking at price to earnings, I'm looking at how the company is doing. I see a company for what it's doing in the world. It looks positive. It looks like it's doing great, that sort of thing, and then I invest in it. If I look at the chart, it just kind of puts me off. I can look at the chart. I mean, it's easy for me to look at a chart. I mean, I can find a chart on any share, on any one of my platforms effectively, and I can even go to this this place here, and just I can go here where I've shown you the VIX, and I can type in any share here, and I can have a look and see what it's doing on this chart if I want to. And this is a free Yahoo chart. So no, I don't even, as I say, look at charts for my investments. My investments are basically 98% fundamental and information and asset value and that sort of thing. That's a completely different ballgame. But my trading, that's definitely 80% technical, 70, 80% technical. I'm just looking at, I read the charts like a book. So I'm not looking at algorithms, maths, or anything like that, or lines or whatever. What I'm looking at, if I look at this, I'm looking at what the big money is doing, what's going on behind here. These are traders behind here that are selling this market down. This is not lines that are selling it down. These are human beings. So I'm trying to figure out what the human beings are doing and what they're looking for. And that's what you're reading the charts for on the fundamentals. So they've read the news. They've done the fundamentals. All you've got to do is watch what they're doing. Because think about it. 95% of the market is made up by institutions. You part of the 5% of retail traders. Retail traders don't have the same information as the institutions, And they've got all the news, fundamentals, and information that you and I probably don't have that much access to. And they probably read into it that much better than you and I can. So if you just read the charts of what they're doing, then you can just kind of follow what they're doing and you'll make the money off it. That's the concept of charting. That's basically how it works. My main reason for asking is I lean more towards technical, but lately I want to really know why the chart is what it is. So Mix has been helping. Looking at the Japan Nikkei on the 4-hour time frame, there is also a gap to the left. Would that affect your trading decision? Rob, you said beyond that. How far beyond that is far enough? Okay, I'll have a look at that. The Nikkei on the 4-hour time frame. Gap. Yes. Okay. I see what you're saying. And this gap thing, right? This gap here is not a trading gap. It's an ICT concept, all right? That if there's a gap and it goes into that gap, then they feel it'll turn around or whatever the case. Will it affect my trading decision? No, not really. It's not a thing. Gaps get filled. That's what gaps are. It's not a trading gap. This is just a gap. Now, gaps, the thing you have to understand about gaps is, in general, from our perspective, from the normal trader's perspective, is a gap is a area that will get filled, but not necessarily today or any other day. It could take forever, but it will get filled at some time, and that's the point of a gap. This is maybe different to the ICT gap is the normal gap trading that the tails and what have you. I don't know if they actually trade with us, but yeah, this is a normal gap, and a gap gets filled. It always just gets filled. Will it affect my trading? No, it's going to fill that gap down to here, and it could go further. It doesn't mean that it's going to turn around. It just means it's going to fill that gap. So effectively, if you are going short here, you're probably thinking, well, it's a good idea because it's probably going to fill that gap now. And then it'll fill that gap and it'll carry on going down maybe. But my thought on this trade is if it breaks below that line and gives us a red candle, then there's a likelihood that it'll carry on going to the bottom. And then you asked me the level beyond that, how far is that? How far is far enough? What you got to do is look at it in a sense of, is there a is there a pencil on here? Yeah, there you go. Okay, so do this. Boom. 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 I'm just doing this for the benefit of what we're going to talk about now. Okay, so let's say this is how the chart is running, should be running. You buy it there, you're selling it there, you're buying it there, you're selling it there, you're buying it there, you're selling it there. So my point here is target is based on that trend resistance line. My point is you shouldn't be buying it here unless it breaks through, in which case, different scenario. But as it stands at the moment, it's on that level. It should come back down to here. Then you buy, and then it goes back up. Even if it breaks through, all you're doing is moving the trend resistance up. So it's creating a trend resistance. It's going to come down to the trend support or come down to lower levels where you're going to buy. And then your target is going to be at the next level up, wherever that might be. But you could put the target all the way up at the top of this level if you want to, or you can have it closer by. For example, if you're going to go short here, you've got a red candle, you're going short, where you're going to put it. You know, you got to look at the trajectory of the chart and just sort of guesstimate that it's going to land there and say, well, 3.6 will be my short. Kind of like that's how you got to do it. But you know, predicting on a trend like this, that's the only way to actually do it. But like I said, I'll go into fib extensions as well if you really want to look along those lines, because you can draw fib extensions to the top and it's going to give you the extensions. I wonder, do we have let's see if I got fib extensions that are going to see if this is going to give me a proper level or not. See, there's your fib extensions. So you can project where it might go next effectively. And I don't know why it's not, oh, there's lines. Okay. So you can project to the next level, which is, oops, at 37, 35 or whatever the case. But we'll go into detail on that at a later stage. You can put fib extensions in if you want to. But I don't want to complicate things now. Trend, you're basically looking at, like I said, the next level up. There's the Nikkei. All right. Okay. ICT traders drive me nuts. They're always looking for fair value gaps, and there's a fair value gap on the 1 minute, but nothing on the 5-minute chart. I don't disagree. Jane sees one on the 5-minute chart. You know, there's fair value gaps everywhere. Do you know how to determine a fair value gap? Let me see if I can show you here. If there's a level, yeah, they're all over the place. There's a fair value gap. You see there, you get a candle that ends there, and you get this candle, and then you get the next candle that starts there. That gap in between is what they determine as a fair value gap. So the price comes down to the fair value gap, and then it takes the money and it goes. Well, it didn't really go, did it? It went down. It's not a system that actually works. It's just something they come up with. Another line in the sand. You know, we draw lines in the sand here. We draw lines and we say, if it goes past that, we're going to buy. And if it stays below that, we're going to sell. But I just feel that a resistance level where it's gone and taken money quite frequently is more of a level to me than an ICT fair value gap. Now, the reason for that is I know that a resistance level is where the institutional money keeps going and keeps rejecting and keeps going away from. So that's a good level for me. I will look at a supply and demand based on the fact that it's pushed money away from there quite fast. And oddly enough, that usually will coincide with a good resistance or support level. So if you look at those levels and you look at your trends and you look at your counter trends, that's where the institutional money is playing. That's what you're looking for. All these other little things that come in, and I don't say they're rubbish and I don't say they don't work. As I told you before, every system works. But fair value gaps, where you've got that movement between the candles, that's just, I don't know, they're drawing a line in the sand there, guys. But this kind of gap, this is kind of a gap up. And that kind of gap, those gaps normally fill. That's just a gap in the market. It doesn't mean anything. It doesn't mean that you have to trade it. It doesn't mean anything like that. All it means is there's a gap. All it means, we have a saying in the market, and it's just you can almost say it's a myth or a joke or whatever. Gaps will always get filled because they always do. And it doesn't mean they get filled today or tomorrow. It's just they get filled. They get filled somewhere down the line. This one's going to be filled most likely. Doesn't mean you have to wait for it or do anything with it. It's another one of those that's just there, okay? Is it going to affect my trading? In no way whatsoever is that going to affect my trading. It's just, I know it's there, and oh, there's a gap. Okay, maybe it'll fill it. That's great. Maybe it won't. If it doesn't fill it today, it'll fill it tomorrow or the next day. It really doesn't matter. It's just a gap. Okay. There's nothing here that's saying to me, the institutional traders are telling you to buy or sell there. No, it's not telling me anything. Nothing at all. You see, what are my thoughts on order flow? If you know how to trade it, if you're looking for liquidity in the markets, just look for it in the resistance and the support areas. It's the easiest. Don't overcomplicate it. Order flow is useful for shares. It's great with shares. Okay, but on Forex and indexes and commodities and stuff, just use support and resistance. It's just so much easier, so much less hassle. Start trading with order flow. Use that for shares. I mean, you really got to be an institutional trader to play around with that stuff. Waste your time on that, looking for flow. Okay, so just wondering, if you drew a box between the gap and pulled it left, what would you see? If you drew a box in between the gap and pulled it left on the Nikkei, I presume. Where do you want me to draw the box, Shane? On the gap or where? There is a level there. I see what you're saying. Yeah, interesting, because what you would get there, let's just draw that in. All right, let's draw that in, because sometimes you don't see everything, and that's actually quite important, Shane. You don't see everything. So, but the problem with this is, okay, that it would have been a, we're drawing too many lines in here, aren't we? But it would be a form of an interim, what was a resistance. It broke above that, shot up, now it's come back to retest. But now you've got the question, does it fill the gap and go down, or does it bounce and go up off of that level? Yeah, interesting thoughts, eh? Yeah. So I get it. There is a level here, or was a level here, that it broke through. But what you have to do for yourself and do for your own sanity is accept that that level is now more. It's gone. It's been removed. And the level is now between there and there. It's no longer there. And it's moved on, let's say. And if you were using a normal Fibonacci, for example, which I know you like to do, you'd like to use the fib retractment, then what would you see here is, your golden zone is below that level. It's below that gap in this region down here, which is quite far down, which means you've gone past that area and broken into a downside scenario. So even with the fib, it's going to go below this. Your golden zone's down here somewhere, which would make sense, because that would be a demand area as well of money. Yeah, it's supposedly, that's the problem, is we start adding too many things in, and we start getting overcomplicated with where the levels should be. And then we end up with a level here and a level here and a level. I mean, if I wanted to draw levels in right now on this chart, let me show you what this is going to look like, just purely out of interest, okay? So I'm going to draw a level in there. Oh, I can see another level. Hang on. I'm going to draw a level in there. There's another level there, okay? And then wait, I can see another level. Hang on. There's another level there. There you go. There's another level there, okay? No, hang on. Wait a minute, guys. There's another level there, okay? And hang on. Wait a minute. There's another level there. Do you see what we've done here? Do you see what's happening here? Now, which one of these levels are you going to choose to work with? Which one of those levels are you going to work on? And how do you know where the price is going to go? Now, That's just going to drive you completely insane. So try and remove the middle, remove all of this, get it out of your system, and try and work around it as best as you possibly can. That looks much better, doesn't it? Now you can see there's a level there, there's a trend there, and you're working towards getting to this level here. Yes, there's a whole bunch of levels in between, but you don't need them. Yeah, I know traders that do that as well. And I can promise you, it's so complicated. I've seen traders with 20 monitors on the wall. Admittedly, I got a few, but it's okay. And every monitor's full of lines, and you can't see what's going on where. Now, like Shane says, there's different levels for taking profits and whatnot. But if you're looking at a bigger picture, you want to take that out of your picture, because what it's going to do is going to put a psychological block in your mind. Remember, guys, we're not trading charts. We are trading on the charts, and we are taking our trades on the charts, and we are using the charts for our benefit to try and determine where the trade is going. Clearly, I mean, we're doing that. We're choosing which way we're going to trade because of the chart. I get that. But we're not trading charts as if they're predictive. What we're doing is we're looking at the chart and saying, where can I take my trade? Where's the best possibility for me to get a 50-50 trade out of that? Which way do I think it's going to go? Once I've taken the trade, all those levels are irrelevant. I'm just looking for the main level, and I'm looking for a maxi level. That's it. And then I'm going to trail my stop loss down and try and take as much profit as I possibly can from that trade. That's it. End of story. It's nothing more than that. Nothing more than that. I mean, once you've taken this trade, what can you do? I can draw levels in here, in here, in here, all these levels that it could take out along the way. But I don't want to take my profit here. I want to take my profit up there. So what's the point of me drawing all these levels in and trying to take profit there? I'm wasting my time. And if I draw a level in here, I'm going to say, oh, I can make $50 there. But I'm risking $270. Why would I take $50 profit? So I don't want to do that either. So I got to look at the bigger picture. I got to look at the overall picture that we've got and say, if I take this trade, could it go long to that point? Could it make me that money over a period of time? I don't know how long. If I'm trading on 5-minute charts, that's a different perspective altogether. And I'm looking at taking trades on a regular basis and scalping. That's completely different. If you take this gold trade, even on this chart here, I can draw a number of levels. You see, I can draw a level there. I can draw, now this is the one that Blue Mango asked me, where's the level? Okay, draw a level there, draw a level there, and I can go on all the way to the bottom, and I can draw more at the top here, of course. You see how many lines you end up with on the chart that are just not necessary. You don't need them in any respect whatsoever. You just don't need these lines. Easy to draw them in, and it's easy to confuse the issue. So even on a chart like this, I can draw loads and loads of lines in, which will just give you levels. And you look at the levels and say, well, I can go there, go there, go there. What it would be useful for is, for example, if you're looking for where that might come back to, you might say, oh, it might come back to this level, bounce off there and go up. So you might be looking at that. Draw one line in, don't draw 24 lines in. Okay. So if you want to have lots of lines on your chart, just remember, it's going to psychologically give you a hard time. But yes, it is areas, and for that, rather than draw the lines in, rather than do what Shane does and just draw a Fibonacci in and say, well, there's some levels, okay, Because you and I both know, and then this will work out as levels for you. So you can say, well, it's at that level, it's at that level, there's a golden zone. Golden zone, it might turn around. You know, Fibonacci will, if you want to draw lots of levels in, draw Fibonacci in. That's the way Shane likes to work. And that will give you the levels that you need. That's probably better, and then you understand what you're doing. On the MT5, the Japan Nikkei has broken below the support trend line. The Nikkei has broken below the support trend line. I suppose it depends how you draw the trend line in. I could go and open MT5 now. So let me do that. You guys won't be able to see this. Just going to open the MT5 and just have a look quickly and just see for myself what that Nikkei looks like there, and let's take it from there. It takes a while to open up, and I don't leave it open in the background usually here when I'm working with you guys, because it might take up some memory space or something like that, because there's a lot going on there. There we go. Let me see. Where are you, Mr. Nikkei? That's the DAX. Look at that. Look at that. Nikkei 225. There we go. Let's draw you on there, shall we? Are we on the 4-hour? Likelihood, yep. Okay. Having a look here. Now I've got pretty much the same chart here. I gotta say, I've got pretty much the same chart here. Let me just draw the trend line in here. Now on my MT5, it hasn't broken. It's pretty much in the same place. So, same chart. I'm just going to close that. Don't need it. Go back to this. Sorry, I can't show you guys that chart. But anyway. Yeah, no, I just checked on the MT5 now. On the 4-hour, it hasn't broken through. It's exactly the same as this one. The one I've got on my MT5 and my cash account is exactly the same as this one. It hasn't changed in one iota. It's exactly the same. So maybe there's something different with David's chart. I don't know. But yeah, no, mine is exactly the same as this. So no difference whatsoever. I even drew the exact same little trend line in there. So no, that's the same. Nothing wrong with that. Okay. Any more fine questions? The US S&P 500 will open today. And now you see I've drawn a lot of lines in here. But why did I draw these extra lines in here? I drew one extra line in at the top here. My opinion on the S&P 500 is this. It's broken into this resistance level. This resistance level is more of an area than just a line. But the only reason I drew a line in here is for the simple reason, as exactly what Blue Mango said, where do I see the top of the target on a price that's just going straight up? So it makes it more complicated to find your levels. What I've done here is I've said, okay, it's broken into this level. There is a resistance level here. It is milling around here. There's a higher spike. It's very much a spike. And I'm feeling that if it breaks above that spike and heads on up, we've got a serious move coming. But then it could break below that support and then head on down for a nice correction, hopefully all the way down to 6,200. That'll be a great correction. And then we can get into these levels here. That would be nice. And then on Bitcoin, I've drawn the extra level in up there as well, which is the main level. But this level I've drawn in here is a level of interest. In other words, it's broken to the upside. It's broken through here now. It's broken through that, what was a support, now resistance, broken up. Now it's support again. But it keeps on coming back. So what I'm waiting is for it to break past that prior high there, breaks past that, and that's also going long. So that's what you can use lines for as well. Yes, that often happens, Nick. Nick just brought up the fact that depends on your broker's data, breaks up the 4-hour chart. And yes, that is totally true. I've had it in many cases where the different brokers have different breakup on their charts. You must remember the brokers are making a market for you. If you trade directly on the exchange, it's actually a different ballgame. And believe me, guys, I've tried investing directly on our Johannesburg Stock Exchange here in South Africa on many occasions. I have an account with them, but you can't trade instantly like this because I'm not a registered broker or whatever the case. So I can't just trade instantly onto their account. So it takes longer to get in and out of the trade. So it's easier just to trade through a broker, and you get instant trading. They make a market for you. They put it together. So sometimes you get different readings on the charts, which is why I always say to you guys, I've seen so many guys reading into a chart and going into a chart and saying it's exactly 6511. It's at this point here, and it's going to turn around, and it's going to do this, and it's going to do that. And you got two different brokers with two different charts with two different candles, and you're basically taking a trade based on that. So you got to look at it and think, if that's the case, surely trading a chart is 50-50. So that's why I always say to you guys, look at the bigger picture. Understand that you're going to lose half your trades. Just look at the bigger picture. It's going up, it's bullish, it's going that way. It's at that level. Both brokerage accounts will be at the same price. It'll just be like the candle will be a different color. It'll be at a slightly different level, whatever. And just base it on that. That's all you can do. And just manage the trade based around that. It just brings to reality. It just brings that aha moment, as I call it, that it's not an exact science. Charting is not an exact science. How can it be if you've got two brokers with two different charts? So when you realize that, and you realize that, hang on a minute, wait a minute, this is not the charts. It's not the charts that are making all the difference. It's the strategy. The charts just give me the opportunity to draw a line in the sand and take the trade. That's when you realize that if there's two different charts, then clearly this is not an exact science, is it? But it does give you the opportunity to place your trades and manage your trades. So many people think that the charts are the holy grail. The charts are going to make me money. They're going to predict the future, that I'm going to have a win rate on the charts and I'm going to win more trades than I'll lose. And the charts are going to tell me when to trade and when not to trade. And I've heard it all before. And I've been battered down for it a million times. When you realize that that's not an exact science, then you realize that, hang on a minute, there's more to this than meets the eye. Particularly, as Nick says, you've got two different traders, two different brokers giving you different charts. Timothy says, trading is rigged, the end. No, Timothy, trading's not rigged, okay? We'd all love to think so, okay? We all love to think that trading's rigged. I mean, this is a great discussion to have, actually, guys. We all like to think that someone's watching us, that someone's rigging us, someone's hunting out our stop losses, someone's rigging it against us. But they're not. They really aren't. But they have allowed you into the market so that you can now have some of your money taken because you don't know what you're doing. Let's be fair. The institutional traders are there to make money. They're not there to give it to you. So when they get into the market and they start trading per se, or investing, or whatever they're doing, they're not there to give you money. They're there to take your money, whichever way. And they've got much more experience than you or I have, so they're planning to beat you as much as they possibly can. And we as retail traders come into the market thinking, we'll take them on, we'll beat them, we'll get their money. And in some cases we do. About 30% of the cases we do. Which is why I say it's not rigged. It's not rigged in anyone's favor. It's actually not possible, the way it's regulated, to rig it in anyone's favor. Although there has been some talk in the background, which is, whether it's true or not, nobody really knows, of them having a split-second advantage over you on a trade or something to that effect, which is doubtful, but possible, especially bearing in mind that you're working through brokerages and that sort of thing, and made markets and what have you. But okay, that said, this is why I always tell you guys, look at the bigger picture, look at the overall picture. Don't try and split hairs. Because if you're trying to split hairs, they're going to beat you. Every single time, hands down, they're going to beat you. If you're trying to trade as quickly, I'm going to grab that quickly and beat that guy, you're going to have a problem. But if you look at a bigger picture and a more overall picture, then the market's not rigged. The other thing to look at is, like I said to you earlier, if you think they're hunting out your stop loss, like I said, you put the for sale sign up and said, I'm selling this at this price. Anyone's going to come along and take it if they actually want it. But if you put it in the right place, like it's too expensive or too cheap, then nobody's going to touch it. It's just the same as real life. If you want to sell something and you put it out there, like say it's your car, and your car's worth, I don't know, let's say your car's worth $100,000, but you advertise it for $150,000. No one's coming to buy it. No one's coming to buy it. So that's the same as you putting your stop loss a little bit further out, making it a little bit too expensive, even for the institutional trader who thinks, I don't want to pay that price. That's just too much for me. I'm not happy with that. And that's exactly the same as you selling your car far too expensive. It's the same principle at the end of the day. So no, it's not rigged. It's just we don't know what we're doing in comparison to they do, maybe. Or, some of us do know what we're doing and we get around it and we make some money. Which is why I keep preaching the strategy of make more on your wins, lose less on your losses, and somewhere down the line, you'll come out on top. It takes time. And obviously, as I've said to you before, investments excluded, because that always makes money. But on my trading, most of my income is made on 1 or 2 trades in a year that go big. And then there's a few that are good and they make target that make money. And then there's a whole mishmash of the losses and small wins in there along the way. What you're looking for is those couple of big ones and those target hits that are about the top 30% of your trades. That's where the money's made. It's not made on the daily trading and the every single trade thing. No, it's not made like that. So no, Timothy, I get you. I mean, so many people say the market's rigged. Everybody feels like it. I know you feel like that. I mean, obviously, everyone feels that way, particularly when you're getting whacked on a daily basis. But it's not rigged. It's not rigged in anyone's particular favor. What does happen and what makes you feel like it's rigged as well is just when you think you've got it taped, just when you think, for example, you come in here and you sell the United States dollar, Japanese yen, you sell that down because, I mean, clearly it's bearish, so you sell it down. You think, I'm going to make some money here. I'm going to sell that. And then somebody stands up and says something, and it turns around and it gives you one of those green moves like that. And you think, this market's rigged, man. How did that happen? It's like they knew I took that trade. No, it wasn't just you. Everyone loses, not just you. You know how many people took that same trade as you? And they stood up and made that little statement which turned everything around. And then you think the market's rigged. But then you have to ask yourself the question, would they have made that statement regardless of whether I took that trade or not? What was that statement? What was it about? Perhaps it was about the economy. And they were going to make that statement anyway. Why was it pushing down? it's not the market that's rigged. It's just those things that come around, and that's why it's 50-50. You never know. Okay. This is probably the most important info in trading, that it'll end up 50-50 no matter what you know or do. FX Trader asks, how long did it take to realize this fact? And I can't give you the exact number of years, but I'll be perfectly fair and honest with you. It took me a long time. A really, really long time. I have to say, I think in all likelihood, I probably spent the first 10 years of my trading career not knowing this or understanding this. I believe, just like everyone else, I believe that there is just charts, and that's how I'm going to make my money. Fundamentals and charts. I'm gonna beat the market by charting. I mean, I didn't even believe in a strategy or a business plan. Fair income. I thought that charting was it. I was going to make my money with a win rate, and I was going to make my money by beating the market on the charts. Just like everybody else believes. I mean, I'm not unique. I believed the same thing. It was just sort of somewhere down the line, and it was really probably 10 years into my trading, it hit me. Bang! Wait a minute. This is this is not how it works. And it just all came to fruition. It all came about, and there's a number of red flags that came up and signs that came up that made me realize that I needed to relook the whole situation. And I did. And then I figured it out. The aha moment came in. Boom. Hang on a minute. You're going to lose more trades than you're actually winning. Yeah. David, thanks. Cheers, bud. Keep well. That by studying indicators, they can predict the price action. Yes, I agree, FX Trader. I must say, the scammers, they try to convince the new traders that by studying indicators, they can predict price action. Absolutely. I mean, that's the whole point I've been trying to get across for the last year and a half of my YouTube channel is, guys, stop believing in this. You know, they send the guys on courses and they teach them that these indicators are going to teach them some kind of price action. They're going to teach them the charts, and you're just going to have a win rate, and you're just going to make money. And it's the biggest scam on earth. And if you don't realize that you need a business plan and a strategy to make money, because that normally the guys don't tell you this. There are one or two that probably do. These days, I think there are one or two guys out there that teach you, you need to work out your business plan. But most of them don't. Most of them just force this, like, do this and you'll, like, ICT was a big example of this. I don't want to talk anyone down, but they were a big example of this. Just do this and use this and look for fair value gaps and look for this and look for that, and you'll just make money, you know. And I saw it all over the place. That's what I've been trying to tell you guys for such a long time now, is that the charts don't give you a predictive capability. There's no predictive capability there. They give you the ability to manage a trade. They give you the ability to take a trade. Yeah. One of my brokers, the 4-hour starts at 2,300 while the other starts at 2,100. Yeah, no, that's absolutely true, Nick. It's it's a bit of an issue, but what I do find is on my cash accounts, this is a funded account that I'm playing around on here in front of us, but on my main cash accounts, those tend to be the same. I haven't had a problem there yet. I suppose I could, but I haven't. I've got a couple of accounts there and they're the same. They work out pretty much the same. But I have seen on the funded accounts a couple of differences. Those are sometimes way off. But yeah, okay, that's how it goes. That's just how it goes. The reason I use the funded accounts for the training, guys, is because I really don't want my account number to be anywhere out there by mistake or anything like that. It's like putting your bank account out there. And that's my dosh, so I keep that safe. So these funded accounts don't cost much, and it's better to use them for this. Trouble is, I don't maintain them as well as I should. I rather maintain the cash accounts, which is more important. Yeah. But it's okay. That's how it is. Japan, are we going down yet? Yeah, that looks pretty much like it wants to go, but it hasn't really gone anywhere, has it? Just want to see something here on these charts. This is the Dow. The Dow showing a, see, that's, looks like it wants to turn around. It is on a kind of support. Will it break to the downside? If the Dow breaks to the downside, you'll probably find the S&P will most likely follow. That's the Euro US dollar. Does appear to be going long at the moment. Somebody mentioned they wanted to go short in it earlier. Does appear to be going long at the moment. Just having a look at that chart there, the NAS 100. Does appear to be going to the moon. And then there's the old DAX again. What's happening with the DAX? Is a bit weak, eh? Is looking a bit weak. DAX is looking rather weak, gotta say. Interesting. Been a wonderful trading day today. Wonderful trading session. I mean, I'm talking session, live session. We've had a lot to talk about. But one of the main things is this whole issue. I'm just going to reload this page because I can feel it's getting a bit laggy. If it'll allow me to, yeah, it's going to reload that page, and I can feel it's getting a bit laggy, and it does that from time to time on that particular account. Weird. Probably on their server or something like that. Their server's probably filling up or something, which is fine. But yeah, talking about particularly, people hunting out stop losses and hunting out take profits. That's always been an interesting one for me. Everybody seems to think that that's going to happen. But one of the big things, like, looking at this Nikkei trade that we were talking about just a few moments ago, I got to say, when you look at that, it brings to light the big thing of patience, waiting, sitting on your hands or just whacking your hands or something, or stopping yourself from doing something silly and actually trading in too early. It's very easy to look at this trade and jump in and trade it. And I'm in and I'm short and off you go because it's got all these red candles because it feels like it's going down. But as we said earlier, as Shane said earlier, look left and you get this whole resistance that it's got a crossover breakdown. But it's not only that, it's got such good confluence with this trend to break through. So patience is so important, and waiting for the next red candle to develop and start coming down before you take that trade. Next red candle to close before you actually take that trade and go down with it. A lot of people won't actually wait. And I mean, you look at gold and it just keeps on going up. If you were patient, you can wait for it just to come down, grab a level down here, and then you can take the trade to the long side. Admittedly, I took the United States dollar, South African rand, probably far too early, but I did it fundamentally without realizing at the time that the Dixie is probably going to fall down to the ground, and that makes it kind of complicated because that could hurt this trade. But I'm still of the opinion that the rand is so bad that it shouldn't get that bad. It should still hold on. Should still hold on somewhere down the line. The amazing thing for me is how Brent crude oil has done just about nothing. Man, oh man, oh man. I'm just sitting on this thing and sitting and sitting and sitting. And it's actually now just costs and fees. So yeah, wow, what a line we've got. Just all the way down here and all the way, and it's just sitting in this range. And now I've got to hope that it breaks to the upside rather than the downside, because I am long on it. But yeah, I've often said about oil, and oil has always been a thing for me. Between $60 and $120 is where it always trades. The cartel is clearly going to somewhere down the line sit together and say, do you know what? Let's increase the price of oil. I want to make more oil per barrel. The problem we do have is there is a lot of oil in the market at the moment, more barrels than needed, and America's got a lot of oil being drilled and what have you. So that's affecting it, and Trump is trying to make the oil cheaper as much as possible for whatever reason. You'd think they'd be making it more expensive to save the world, but no, they're making it cheaper to save the world. So, okay, that's great. That said, it is pegged against the US dollar as well, so it is going to obviously have an effect on how much it costs. But yeah, one has to look at where it's going to go. And as far as I'm concerned, the only way it can really go at the end of the day is to the upside and be a little bit more expensive. I think it's what it's going to do fundamentally, and now here comes the fundamental side of my trading, is it's going to surprise everyone and jump to the upside sometime soon. Sooner rather than later. Trump wants gas for $2 a gallon. So do I. But, at the end of the day, we have to be realistic. But yeah, old Trumpy's really trying to break the oil price down. But he's up against it because the cartel sits together and the way they lift the oil price often is they hold the barrels back. They don't put it out into the market, and they control the market by not putting it out there. And if they're sitting together and they're not putting the oil out there, then it's going to get more expensive because there's a scarcity. So yeah, it's supply and demand, and that's how they work with it. Will he be able to do it? He claims he's got enough oil in America, so that could affect it if he's got enough. But does he have enough? Why are we still buying from all over the place? So yeah, at much of a muchness, I think they will sit together and increase the price again, at least to $75 or $80, because it's always averaged between $70 and $80. Always, 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 always. At the moment, it's sitting a bit below that at the 60s, 66. And I mean, I've seen oil get up to 120. I've seen oil get down to 0 because of the disease a couple of years ago. So it could go either way. But yeah, that's we'll have to see how that goes. Nick says oil will be $150 a barrel soon enough. Something's gonna surprise us. You see, that's what Timothy said earlier. Trading's rigged. Sometimes you look at things like that and you start to believe that terminology, because we all know that oil's going to surprise us. Everybody's going to be like, oil's going down, oil's going down, oil's going down, because they're pushing that agenda. They're telling you they're going to push oil down. And then everybody's going to go into sell mode on oil, and then they're going to shoot it up to $150, like he says. And then you all be in shock, like, what happened there? That's how it works. That's how it's rigged, by the way. That's how it works. Everybody, they just get everybody, they sweep you all out, and then you find it going. It happens to you, like on the US 500, for example. It's going to go up. You want to get into a trade. You get into a trade, and then they sweep you out of the trade. They sweep you out of the trade somewhere down the line, and you get swept out, and you think, that's okay, I'll get back in. And when you look again, it's gone without you. They sweep you out so that you don't make the money. But it's not rigged. It's just how they do it. If you know how to get around that, then cool. AI and data centers are so power hungry. Within 5 years, energy will at least double. And you have a point there, Nick. That's a very, very interesting point. I have to agree with you that there is going to be a demand for energy in such a big way, because everything is power hungry at the moment. Energy hungry, I mean, not power, energy hungry. everything needs energy. The whole future of the world, you know, the idea of somebody getting a job has changed completely. It's not like it was in the old days, where a person went out and worked in the coal mines or became an electrician or a mechanic or whatever the case. These days, those types of jobs have disappeared, and people are going out there and working in AI, working on computers, working on a different basis. Very much what we used to call the office job or whatever the case, but different kinds of work. It's not like, oh, AI is taking over, people are becoming unemployed. No, people are just changing the way that they earn income or changing the way that they live. And the way that people are earning a living now or going towards, as Nick says, is going to be energy hungry in a big way. People are going to need more energy to produce. And I mean, even if, for example, we start producing food with less people on the production line, but more people running the production line through robots, whatever, all that robot AI stuff is going to need more energy. Then we start talking about quantum energy and all that sort of stuff, which is insane amounts of energy. Where's it all going to come from? I know we can't run it all on coal and diesel and fuel and all that sort of stuff. And nuclear is becoming very unpopular at the moment, although some people still believe in it. But they are looking at cleaner forms of energy and that sort of stuff. But I don't know. It's going to be quite interesting, I must say. RJ Molly, how's it? The wind and solar is not going to make... Yeah, the wind and solar is going to struggle. Even the wave thing, it's going to struggle. I love the idea of the wind and solar, I really do, but I do believe it's going to struggle. And if they're not going to use nuclear, I don't know. But I believe they've come up with a clean source of nuclear energy. I don't know what it is and all that, but it hasn't been put in place yet. I don't even know if they can do it, but they said they can. We'll see. I mean, let's be honest, nuclear plants are a bit scary. So, yeah, batteries are not going to work either. You're right. There's the hydrogen has been talked about for a long time, but it's never really come to fruition. So I don't think hydrogen's going to be the answer either. My opinion has always been some form of magnetic or magnetism or whatever the case. You know, that seems to provide a lot of possibilities, but I don't know if anybody's working on it or what. Maybe somebody is. It would be great for vehicles and cars and things, and if you could create an engine that works on some kind of magnetism, whatever. Just my thoughts, but yeah, I think that's one of the options that they could look at. But providing power to the world, I would say if they could find a clean form of nuclear energy, that would be great. That would be great. Like, in other words, if it does tend to blow up, then it doesn't destroy the world, so to speak. The new small nuclear reactors, I believe that's already a thing. When they're making new small nuclear reactors, it's already quite a big thing. Yeah, no, we have it in rail in Japan, Shane. Yes, I've seen that. Those rails, and that doesn't fall off that rail. That's quite insane. Look, I don't think we would be able to do that with cars, but we might be able to create something within the car that makes the engine move or something. You know, I don't know. That could make the car work. I believe that's maybe the way to go in the future. Superconductors, there we go. Yeah, that's the word. Probably. I'm no genius, but that's just the way I think. I'm surprised that they haven't gone down that road 100% because it does seem like a good road to go down. It really does. So guys, this has been an absolutely marvelous show again. I think it's time for me to be on my bicycle and on my way and heading on the road and doing my thing. It's been absolutely marvelous talking to you guys again. I've had so much fun as per usual. It may not seem like it, but it's been great fun. I must probably go and fight with Discovery Medical Aid again. Useless lot, really. Whatever you do, guys, don't take them as an insurance or medical aid. You can't trust them. Absolute rubbish, I tell you. Nothing but problems. But okay, guys, thanks for watching. Let me not pile my problems onto you. And you have a wonderful day. Don't forget, keep your feet on the ground, reach for the sky, stay positive, and make lots and lots of money. Enjoy it. Take as much as you can. And show those institutional traders what you can do. Guys, thanks so much. And I'll probably see you guys on Thursday for the next live show. And and those guys that are members and whatnot, you get the trade of the day every day, and you get to hear my voice telling you about the trades and what's going up and what's going down. But guys, thanks very much for being here. It's been fun. It's been great. And I'll see you guys probably all on Thursday again.